Deflation wave. Deflation wave. All right, listen up because what I'm going to say is very, very important. What we're seeing today in the market is your typical deflation reaction, which is the correct reaction that comes from lack of Fed or other central bank action. In the case of maybe some of the other central banks like EU or Bank of Japan, in the past you've had an expansion of negative interest rates, which they think is stimulus, and immediately we see the deflation wave, which that's one reaction, or that is a reaction by the market uncharacteristically, which is a correct reaction. Now, in the case of the Fed, we don't have negative interest rates; we have positive interest rates. So there is a net, flow, positive flow to the non-government through that interest channel. So while the lack of a rate hike, initially it was taken positively. We saw, the S&P rally. We saw gold rally strongly. In fact, gold is still holding on to its gains. But now we're seeing that kind of deflationary reaction, especially in commodities and especially in crude oil. And I want to talk about crude oil. So first of all, let me just say the deflation wave that we're seeing is understandable. However, there's no reason for it because we have a positive rate. We've had a positive rate all year. The Fed has not raised rates all year, and we see that the flows have been sufficient to drive the market to new highs, new historic highs, and keep us out of a recession and give us second quarter growth that is double what we saw in the first quarter and the fourth quarter of 2015, and even give us some wage pressures coming in here. And by the way, that was mentioned yesterday in the Fed statement. But let me talk about oil. And I know some of you have oil positions on. And I have an oil position on. And we're long from higher up. And, I guess about depends on where you're in, maybe could be anywhere from $3 to $4 higher. So, it could be a 7 to 10% against us. Again, doesn't make it any easier. I know it doesn't feel any easier, but if we're macro traders, if we're looking at the big picture, a 7% move, even a 10% move, you got to be able to handle that. Everyone out there who is selling oil, and it's a lot of speculation right now, speculators, they're all looking at the same thing. They're looking at the supply, the discussion. Everywhere you look, it's about the supply, it's about the supply, it's about the supply. Everyone sees the same information. Since when everyone sees one data point and they all crowd into one trade, has that been an exceptional or really money-making trade? You had that guy yesterday, that hedge fund guy, Dan Loeb of Third Point Capital, whining, complaining. I did a video yesterday about how we all get in crowded trades. Well, they're doing it again. Okay. Many of you who have been following me now for a while, who have the MMT Trader, you've been amazed at the success, at the profitability. Some of you have maybe never been profitable, and now trade after trade after trade, you're making money, and it's like, wow, the Mike stuff is genius. It's amazing. I see the market with x-ray vision now. In fact, I had somebody say that once. But every once in a while, you get smacked with a dose of reality, and the dose of reality is where your mental game has to kick in overdrive. Now, if you didn't overexpose yourself, you're fine. If you did overexpose yourself, either by accident, not knowing the size of a contract, or by intentionally taking on too much, then that is a failure of strategy. Okay, and if it was an accident, it was a mental game failure. It was a slip up. If you're good financially and you're not, at some level where you're forced to maybe liquidate, then these feelings that you have, looking at the oil going down and hearing me saying, look, you got strong demand, you got the head of BP, you got the head of Anadarko Petroleum, you have a lot of people in the oil industry, knowledgeable people about oil, are saying they're seeing demand rise. You have The Energy Information Administration of the U.S. predicting above a 52 barrel for 2017. The Department of Energy is stacked with petroleum and energy economists who look at this same numbers that everyone is talking about supply, but they're looking at it, and they're not going to make a $52 estimate if they don't understand that supply is high, but demand is rising. You're feeling bad, you're feeling stressed, it's eating away. You got to deal with those feelings. Make it hurt. Make it hurt as bad as it could possibly hurt. You're still in the game, okay? You come out of this stronger. Emotionally, from a mental game aspect, you come out of it stronger. These times are going to happen. Times like these are going to happen. You're going to have to deal with the emotional stress. It's part of the game. It's part of the trading game. We love it when every single thing goes our way right from the get-go. That's not how it works, okay? We operate on the basis of probability here. We put a lot of things, we pile up a lot of evidence and analysis to give us a very high probability of an outcome. Sometimes we're going to be wrong. When we're wrong, we'll work our way out of it. The important thing is you got to master yourself. Don't overexpose yourself in terms of positions, okay? And everything is going to be all right. Believe me, everything is going to be all right. All right, so that's the video for now. I'll be back a little bit later. I'm going to talk probably about the meeting of the Bank of Japan, which is happening today, and tomorrow could be some big helicopter money coming out. All right, see you later. Bye.